see what the market's crazy ride means for the tech world and for Apple especially. Joining us now is senior equity analyst at Gleacher Co, Brian Marshall, also a Bloomberg Best on Apple. So we got to talk about the Exxon thing.
Sure.
Apple briefly surpassed Exxon in terms of the market cap. Your reaction to this, and is it only a matter of time before this actually happens?
That's a good question, Emily. I mean, we wrote about this in our most recent note, saying that this would happen later this year from a market cap perspective. So taking the share price times the fully diluted share count. So, clearly Apple hoards its cash, as Corey so eloquently displayed with his rubber band and a wad of cash. But at the end of the day, $76 billion. You take that out of your market cap to get to your enterprise value. And so on an enterprise value basis, no, Apple is below Exxon. So at the end of the day, I think the interesting thing today was Apple was the biggest market cap company. So interesting. I think, going forward, there's one thing that they just don't understand. That's law of large numbers. I mean, Apple is at almost $30 billion in quarterly revenue, but they're still growing like a startup, 80% year over year. It's just phenomenal.
So what can we expect from Apple going forward? Shaw Wu at Stern AG says PC sales could double, smartphone sales could triple?
Well, I think, clearly we have such a phenomenal runway ahead of us. I mean, as Peter pointed out earlier, there's only 5% unit share of the global PC or global handset space, about a 5% share of the global PC space. So just tremendous opportunities going forward. And I think they really have an opportunity to at least double the company going forward, with some minor product innovations.
That said, can Apple stay on top?
Oh, for sure. I think so. Yeah, I mean, indefinitely, at some point down the road, it will slow and everything will come to a stop. But right now, they've got the best products on the planet. They've got a very powerful ecosystem, which is roughly 225 million distribution pipelines out there. Just a phenomenal way to distribute content and apps.
More symbolically, what does this mean about the way the world has evolved, the way the economy has evolved? I mean, does it mean that innovation is more valuable than even oil?
Well, I think people obviously need gasoline, but I wouldn't discount the general public's ability to purchase hot consumer electronic gadgets. I mean, a couple of years ago, 2008 and early 2009, it looks like the sky was collapsing from an economic perspective. Yet Apple continued to grow phenomenally well. We're talking 30, 40% year-over-year growth rate. So I think if Apple continues to make compelling products, consumers will buy them. Whether we're in a good environment, a bad environment, I don't think it matters. I think people want Apple products.
It has certainly been a rocky environment the last few days. Major losses over the last week, but some rebounds today. What are you seeing in terms of tech stocks that look good?
Sure. I think a lot of tech stocks are on sale right now. So clearly there's phenomenal opportunities. I would take this point in the market to increase the caliber of your portfolio. So I would look for high growth, high margin, recurring business streams. And so I think Apple is clearly one of those. I think Juniper is another. I think F5 is another one. So clearly there's some pretty interesting opportunities out there in tech. S&P's down about, called 15% over the last couple of weeks. Apple actually is only down 4%. So, 4 or 5%. So clearly, it's taken its lumps. But at the end of the day, it's not that bad.
How about Cisco? You also cover Cisco. They're reporting tomorrow. They've had kind of a wild ride over the last few months as well.
Sure. Yeah, I think Cisco's an interesting beast. There has been a financial bleed at the company. Operating margins have come down by about 600 basis points over the last couple of quarters. Having said that, I think they're bottoming out here. I think the company's making the tough decisions. Like the 6,500 RIF reduction in workforce that they did recently. They're changing the management council structure. They shut down their consumer flip business earlier. So I think there's only a couple more things that they need to do to improve the business. I would say that the street is not expecting much from Cisco. So we're actually starting to warm up to Cisco a little bit.
How about the layoffs? Is that a step in the right direction?
Definitely. Yeah. I mean, one of the things that we've seen is the headcount just go up and to the right over the past year or so. Revenues haven't done so. They haven't followed suit. So there's a disconnect between the rate of their operating expense growth and the rate of the revenue growth. And so we think that this headcount reduction was basically something that needed to be done.
All right. Brian Marshall of Gleacher Co. Always great to have your thoughts on Apple and everything else. Thanks again for joining us.